All right, guys, welcome back for another Bitcoin macro analysis video. And in this video, I just want to lay out, sort of what I'm looking at. And in my opinion, the monthly chart takes out a lot of the noise in the market. And right here, you can see that over the last period of several months, you have a higher high set in on the monthly, and then price comes down and sets in a higher low. Typically, I don't have moving averages on my chart, but right now I have a 21 moving average. And the reason why it's on the chart is it illustrates, another area I'm looking at in price action. So when price comes down and sets in this higher low, it then takes out February's high, and that's where you get your confirmation of the higher low. So it trades above that high, closes above this close, and uh, and then the lows are defended. You see, start price comes down, turns around, starts taking out the highs, starts defending the lows, and yeah, we've sold off from the monthly open, but we're still defending the lows, right? We haven't taken out this low yet. Doesn't mean we can't do it. We definitely could do it, but we haven't done it yet. And in that sense, I think that represents a very good uh, invalidation point, right? We're very close to the inflection point on the market, right? Because if price comes down here, trades below this level, closes the monthly below this level, uh, that's your invalidation, in my opinion, on this chart, right? Because if that happens, something's different is happening than what we're looking at. Um, and when price is that close to an inflection point, that these represent the best trading areas. This is the most maximum opportunity right here. It's not comfortable to trade in those areas because it feels like you're very close to the inflection point, and that it could run on you pretty quickly. But just from a risk reward perspective, these are the places where you want to be engaging with the market. And so that's what I'm looking at on the daily, on the monthly. And I want to bring your attention to something, another thing I noted on the quarterly. And so we can go to the quarterly chart and just mark each of these off. Right here, quarterly open, quarterly open, quarterly open, quarterly open. Now the close itself doesn't matter. I want to look at it on the daily chart. Just point this out to you guys. So let me just put that in there. But so we have our quarterly open here in October, and one of the things I pointed out previously is that when you get your quarterly open, you can get those can be pivots on the market. So you can get, here you have a daily downtrend, then you get quarterly open, price reverses on you. Uh, it price just bucks the trend and does whatever it wants to do. The quarterly open serves as a pivot, and we see that characteristic in the previous two quarterly opens as well. If we go back to summer 2021 and spring 2021. So here, and this is kind of the characteristic I'm looking at currently in price action. So right here, you have your quarterly open here, and then your quarterly close over here. So all in all, this is could be characterized as a very solid uptrend, up close quarterly. But you see this counter trend liquidity move in the quarterly after the quarterly open, and this is very, very common, right? A lot of times if the quarterly candle is going to expand to the upside, there'll be a brief period initially where the price goes in and sets in the low for that candle, and that usually happens very early on in the candle's history. And we see that right here. So you get a move counter trend to gather liquidity for the ultimate move up. And if we go back here as well, we can see that here. You have your quarterly open right here, April 1st, 2021, and then price moves up above the highs, grab liquidity above the highs, moving counter trend to the ultimate direction of the candle, what would be a down close candle. So you get that brief counter candle move, and then pick up liquidity, and then set in the go towards the close. And that's a very important price distinction I want to point out, because I think we may be seeing that currently in price action. So if we go back to the current price action over here, let's see, we have our quarterly open here at April 1st. So what I'm looking at here is, is this similar to those previous times we pointed out, where this will ultimately be a quarterly up close, And this is just the brief counter trend liquidity grab before the up close candle to set in the low. Of course, there's no guarantee that will happen, but the fact that this is a monthly invalidation we marked off, we'll just go back to that real quick and point it out. Right here, that monthly low right there, go down to a daily, that 37,000 level. And with what I just mentioned in the quarterly in mind, you can see how we've really moved down into the ideal risk reward area, the ideal risk reward area to be building positions. Of course, we could get a little bit closer, if price dipped down into the 38,000 region, that would be even more ideal. But you can see this is the area of opportunity right here. And, it's further, you could go on a little bit further and just build this idea out. You have your contracting volatility area here that I pointed out for feels like multiple times I pointed it out, and I actually took this trade. So volatility was contracting. I got long, expecting it to break up. It did break up. I made a pretty good amount of profit on that trade. And what happened was you had your FOMC meeting come into the market right here on March 16th. And on March 16th, you had the volatility expansion, and then typically, price was in a low volatility state going into the FOMC meeting. And then you get that data release, and then the volatility picks up. And that's very common, right? A lot of times, price will kind of stall waiting for that data release. And then you'll get the data release, it'll sort of knock the door down, and then volatility will flow. And that's exactly what we saw here. So we had the FOMC meeting here on March 16th in the afternoon. And now what I want to draw your attention to is that price has made a full swing back to that area, right? To that, it's this area, in here where the data hit, price comes down, hits it. That's kind of the basis for me taking a trade in this region. And, all I'm looking for is a reaction, right? So I want to play the reaction off this level. You already saw a little bit of reaction, but, and again, these lows could get violated again. Doesn't matter. But this is the area I want to look at when I'm looking at these different price swings. And you can see, price came down to this. Let's get exactly down into it and see exactly the level we're looking at. And get pull the microscope out, and this is important because I just want to demonstrate how you can really get into the weeds, and even doing that, you can still extract a lot of value from that experience. And so we had the FOMC meeting. Okay, so this is the exact low right here. So this low here, so it lines up with these highs, but this low exactly here at 39, roughly 40,000. We'll go over here, and you see price comes down, hits it, reacts off it, and now it's come down and based off it. So you have this swing, right? This full swing that made a full retrace. And now if we go down to the lower time frames, you get another swing forming off that. So it comes down to that 4-hour level, hits it, has a reaction, and then that reaction is a 15-minute swing all in itself. And then, you have a very tradable move off that, right? And it's retracing back into that level. And, this is interesting because this is the phase in the market where people are, volatility is kind of getting to the edge, right? We're kind of in that zone where the risk reward opportunity on different plays is reaching a very, very high level. And price is sort of getting forced into an area where it's going to have to make a decision eventually. And, so one way to illustrate that is to go through the different time frames. So just start with the monthly and just go one by one, right? So here we have the monthly uptrend that I identified previously. This is a classic uptrend. I shouldn't have to explain why it is. That's pretty self-evident. The weekly, maybe you're not characterizing this as a uptrend because you don't officially have your weekly low set in place. You might, most a lot of people might not be looking at this as a higher low necessarily on the weekly. But what you could say about this is that you definitely don't have lower highs, right? You have a very clear, distinct higher high here, so you can't. This can't be said to be a downtrend. So we have a monthly uptrend, no clearly defined trend on the weekly. Let's go down to a daily. Just going one by one. The daily, this is a very clearly defined uptrend. Not necessarily uptrend because you don't have the higher low. So I should take that back. So, but it's not a downtrend either, right? You have a higher high, and you don't necessarily have that higher low, at least relative to this low. But the point being is that it's not. There's no downtrend. You have to go down to a 4 hour to get to your downtrend. And here, so where would the 4 hour downtrend be broken? Well, right here. And this is what I'm talking about, where price is very close to that level. So, price really, if price were to go above 41,500, trade above that level, you know, maybe close a 4 hour above there. Well, that's an area where at that point, under that scenario, there's not a single time frame that would be in a downtrend at that point. And so you have this uncoiling of volatility. And if those highs are reclaimed, you're probably going to get a volatility expansion to the upside. What does that mean exactly? Well, when volatility expands for the upside, it generally reaches for liquidity above old highs. And where would that be? Well, this high right here. So that's the way I'm looking at this. It seems a little bit crazy, maybe if you have a bearish bias to say that, but that's sort of the way I'm looking at it. If these highs get taken out, this becomes a higher low on the daily. Higher. So this higher low on the daily is the same thing as higher highs on the 4 hour. We, call it whatever you want, but you see 41,500 taken out, and I think that price would make a pretty dramatic run up for the highs up here. Now, if we go to a monthly chart, that it doesn't seem as crazy, right? All we're saying there is that, if the monthly doesn't take out the lows, then it takes out the highs, right? It's got to do one or the other, right? I'll tell you that. I mean, you could have an inside close, but this is a good example of how the monthly takes out the noise, right? If the monthly low is defended, price will run for the highs. And this is why the high time frames are superior to the lower time frames, because they're much more effectual. Now, I think the part where people get it twisted is because the higher time frames being such a high time frame, they take a long time to play out. And so if you're approaching it without that understanding of how long they take to play out, then you can get lost in the intraday moves, and you sort of, you lose the big picture. But, a monthly chart can take, a significant amount of time to play out. I mean, even here, right, you see this low set in here. You get this very clearly defined swing low, right? You get this low here, surrounded by two higher wick lows. You have this ultimate low in June, surrounded by a higher low here, higher low there. Classic pattern, but it takes a few months to play out, and that's the same thing we're seeing here. So it's not fun if you're trying to get that quick position, but if you're trying to slowly build a position over time and manage that position with the intention to hold that position for a long period of time, you want to be looking at the high time frames. That's really your bread and butter in there. And to just kind of back up some of what I'm saying on the macro, I'll go to some of the on-chain charts. And we've got the Bitcoin stock to flow I did a video on this previously, but you can see that this just maps the supply against the price of Bitcoin, and you can see how, you know, the supply is, very, very deep in premium, or the indicator is showing that, Bitcoin's price relative to its supply is one of the cheapest valuations it's ever been at, uh, relative to other historical periods. I mean, you kind of have to go back all the way to 2010 to get anything. Okay, maybe right before the bull run, right before the parabolic bull run in 2017, but you get the idea. And also to add on to that, you see this balance of Bitcoin flowing off exchanges. Again, this is just a fundamental on-chain metric. But when you see these type of things, these fundamental indicators lining up with actual price action on the chart, you can just mark off these this previous monthly high right here, and you can use the high as an invalidation, the low as an invalidation, right? If this high gets taken out up here, it's probably a situation where you get a continuation up to run above these highs and form a higher high on the monthly. And it sounds totally, saying it from this position sounds insane, right? Not insane, but it sounds like a low probability scenario. And I guess what I would like to emphasize is that it's actually not a low probability scenario. The 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 highest probability, the highest probability scenario is that these lows here hold and price runs for the highs up here, because ultimately that's what an uptrend is. And as the saying goes, the trend is your friend till the end of the trend. Of course, that the last clause of that is very important, right? If the trend does end, it does end often. And when it does end, we want to be paying attention to those signs and, not, turning away from that information. And really, in my mind, that level is right here, that 37,222 level. So if we just briefly go back down to the low time frame charts with that 37,222 level marked off, if you get another spike down below these lows right here, that's really a great trade. Any intraday sell-offs in the next few days, leading into the weekly close, those are great trades coming up. With if you're looking for a position trade, and then of course we'll see what happens with the weekly close, but I doubt we see a weekly close below this level. Could happen, probably not. So hedge your bets. Take your chances. And for me, I'll be currently entering a position. I'm actually in a position currently, but I'll be showing more live trades based on that in a little bit. So yeah, just make sure to like the video, and if you guys like this type of content, make sure to subscribe to the channel. Keep an eye out for notifications on new uploads, and I'll catch you guys in the next one.